Alternative investing is capturing investments in basically any assets which is not bond, equity or cash. The most important things they think about is hedge funds, private equity, real estate, and then these days also things like wine, art auctions. The AQR Institute at London Business School has decided to hold the Insight Summit on the topic of alternative investment.
Alternative means offering a source of returns that is diversifying with respect to traditional market risk premia. This is not simple exposure to S&P 500 or a Barclays Agg. It's looking to harvest alternative risk premia across multiple asset classes.
The industry has mushroomed, and the statistic is that we are talking here about 7 times growth within the last 12 years, which is remarkable by any stretch of imagination.
Alternative investing has been growing for a while now, and in the current market environment we have a situation whereby interest rates are very low. Therefore, it is most likely that they're going to raise rather than they're going to fall. Alternative investment may help investors to protect some sort of their returns and also ensure that the worst events may not materialize for them.
These days, things like distressed investing have become very important. These tend to be high-risk assets, and there's also very often an element of less liquidity. We talk about liquid alternative investments when the investors can take their money out, like mutual funds, hedge funds, ETFs.
Liquid alternative investing has seen massive growth in the last 5 to 10 years. Part of that is fueled by the recent low expected return environment as investors look for diversifying sources of returns. Liquid alternatives are a natural way to offer that diversifying source of return to a traditional portfolio. Second, you've seen increasing transparency and understanding of what historically would have been called hedge fund alpha vehicles. And as we gain greater insight and an appreciation of those strategies, we can seek to deploy them in more transparent vehicles. You combine those two, low expected return environment and greater transparency and understanding of traditional hedge fund strategies, that is supporting the huge growth we see in liquid alternatives today.
Within alternative investments, another area which is characterized by being illiquid is private equity. What we mean by private equity is really buying private company or buying public company and make them private. That gives an exposure to a type of companies which, because they are not traded, investors may not be able to be exposed to that type of risk by buying shares.
Private equity industry has changed drastically. It started with pretty bad image in the 70s and 80s, described as asset strippers and corporate raiders. Since then, the focus has moved drastically into operational engagement and value added. The results are quite remarkable. It's no longer the boogeyman of the financial markets, it's totally a legitimate asset class.
We've heard today very interesting speeches about possibility of growth with certain categories of investors. So I remain optimistic, but also cautious of what the future can bring.
I see a very interesting future for liquid alternative investing, particularly in the fixed income asset class. That is an under-researched and I think an underappreciated asset class that lends itself very well to liquid alternative investment product. So I see in the coming years a lot of growth towards fixed income oriented, styles-based portfolios.